Hello trading friends, and welcome back to Forex Focus, brought to you by IG. Taking a look at the euro dollar trade as it moves lower just when you thought it was safe. Euro dollar moving lower again on some softer European data, as well as some stronger hawkish vibes from the US as well. We'll get into all of it in just a second, but let's start with the euro dollar price action. As this market's had a volatile couple of weeks, and when I say just when you thought it was safe, I'm of course referring to the fact that this market has rallied up above 109 a few different times and kind of lulled you into maybe thinking that, oh, they'll take another run at 110, and maybe this euro will finally rally back to some recent heights in recent years. And no, not the case in recent trade, as they reversed all of those gains coming off of the FOMC of about a week or two ago, and now trade close to recent lows down at 108. And we'll cover the ins and outs of these moves, especially these downside moves, in just a second, and where they're coming from on the euro side of things. But just to quickly speak to the US side of things, of course you saw this rally in euro and fall in US dollar coming after the March FOMC, where Fed Chair Powell again confirmed that they are likely to cut rates at some point this year, so confirming 2024 cutting rates, and came out with the dot plot that also confirmed that rates, most central bankers at the Fed think that rates will be lower by the end of this year, and in the longer run, much lower than where they currently are. But what people often forget around these Fed meetings is that the European Central Bank meets, the Bank of England meets, a lot of these global major central banks meet, and they ended up more or less canceling out some of that seemingly dovish sentiment from the Fed, and now that euro dollar trading lower again. But also there's a European side to this. We've taken a look at some European data recently and see it might not seem like much, but sometimes these tier 2 data points do emerge as being very relevant to the price action, just because they're so much either better or worse than expected. And we had here the German manufacturing data that came out on last Thursday, lower than expected, lower than the last handful of months here, and kind of confirming the trend that we've seen, which is some softer European data than expected on a lot of data points over the course of the last couple of months, especially. And we wanted to highlight exactly this data point, as well as the Bank of England meeting that you might say, oh, well, the Bank of England, that's the UK and that's the British pound. But keep in mind that the UK and Euro area economies are obviously very closely tied, and the central banks have been pretty closely tied as well in recent years. And you can see here in the 1 hour chart for the euro dollar, the big moves to the downside for the euro off of that PMI. And it was able to bounce back there, probably because the looming Bank of England meeting that was coming right after it. And then you saw some considerable downside, not only for the euro, but the pound at that point. And then that continuation, as it seems like the sentiment really just set in that, you know, we rallied this euro up to 109 and beyond after the Fed came out and said, and that big green bar that you're seeing there, those big green bars on the leftmost part of the chart, is the rally in euro coming off of that March 20th Fed meeting. So you rally up this euro on the idea that, oh, okay, Powell just said they're going to cut U.S. rates. Okay, so that's, you know, bearish for dollar, it's bullish for euro, and then it's not even a full day later that the same kind of talk is going on at the Bank of England and is expected to go on at the ECB and everywhere else globally. And the conversation more becomes, okay, Fed Chair Powell says they're going to cut at some point this year. But if that at some point is, August, September timeframe, but for the UK and the Euro area, it's May, June timeframe. Well, that is potentially bearish for that euro, even though the U.S. is looking to cut. If they don't cut as soon as or by as much as the UK or Euro area or central banks of these other major currencies, then it ends up potentially being a bullish thing for this U.S. dollar and bearish for currencies like the euro. But I want to take a look at some more historic price data just to look at where we're at currently. And you can see that those big moves back and forth on the rightmost part of the chart over the course of the last couple of weeks around these central bank meetings and European data points have led us back to some recent lows around 108. And you look at data for 2024 so far, the low is around 107. So obviously a market that's capable of dropping 100 pips or so to those year-to-date lows. But in terms of the last year's worth of action, this is a market that has gotten down to 105 in the last year. And, that's only 300 or so pips away from current prices. Now, on the upside of things, the market started the year right there at or maybe above or just below 110, depending on exactly when you were looking, but ended 2023 there in December as high as 110, 111. And in the summer of last year, this market got up above 112. And so right now, kind of in the middle of the range, the last year's worth of range being, 300-400 pips away from where the market currently is, with plenty of room to move in either direction. And, given the recent weakness in euro that we're seeing off of a relatively more hawkish Fed, I say relatively because the Fed and most central banks are coming out pretty dovish these days, but relatively more hawkish or relatively less dovish, however you want to look at it, but also weaker data from Europe. We're going to get a lot more of those events throughout April and May on both the European and U.S. side of things before we enter the summer trading sessions. But let's finish by taking a look at the proprietary data from IG, the client sentiment, showing a pretty even market, but those IG clients with open positions in this euro-dollar market are on the long side. Majority are 56%, and so you do maybe have some of these IG clients buying into this recent weakness, thinking that it can bounce back from the 108 handle back into the 109 handle. But that being said, there's a pretty even market, and it makes sense. I mean, you look at the last year's worth of price action, and 108 is pretty average or fair value, whatever you want to call it, given the last year's range of 105 to 112. But we'll see where euro-dollar goes from here. A bit of weakness recently on some U.S. strength, but also some European weakness itself.